Look across the global financial markets right now, and you'll see a landscape that has essentially frozen in place. In the crypto sector, the Fear and Greed Index has plunged all the way down to a 10 out of 100. That is absolute maximum panic. We are now in a 76-day streak of extreme fear. The last time market sentiment stayed this dark for this long was during the catastrophic collapse of FTX. XRP has felt the weight of this panic more than most. It has dropped roughly 60% from its mid-2025 highs, currently holding at the $1.31 level. For retail day traders, $1.25 is the technical line in the sand. The consensus among the Fear Index crowd is that a break below this floor triggers a total freefall. But while everyday traders are screaming that the asset is dying, the institutional whales are dead silent. They aren't panicking at all, which indicates they are looking at a completely different reality. To see what the smart money sees, we have to stop looking at the exchange price charts and start looking at the actual blockchain infrastructure. While the red price line drops, active wallets on the XRP Ledger hit an all-time high of 8.18 million. Daily transactions also spiked, topping 4 million. It's a mathematical contradiction. Network utility is peaking exactly as market valuation collapses. Institutional investors ignore retail fear because they build their strategies on actual network data. And right now, that data is flashing a massive buy signal. If retail traders are panic selling, we need to track exactly where those tokens are going. In a 48-hour window, whales removed 442 million XRP, nearly $592 million off exchanges into cold storage. This systematically destroys sell-side liquidity, creating an engineered supply squeeze. The market becomes a coiled spring, primed for violent upward price action. These withdrawals represent a calculated transfer of assets from retail hands into institutional cold storage. To understand why the smart money is hoarding supply right now, we have to look away from the blockchain and look toward Washington, D.C. The timing of this whale accumulation aligns with a critical window in the Senate, the path of the Clarity Act. This bill draws a strict jurisdictional line between the SEC and the CFTC, formally classifying assets like XRP as securities. For years, legacy banks and asset managers have been forced to stay on the sidelines due to regulatory uncertainty. This single legal classification would remove their final compliance barrier. By sweeping the supply now, whales are positioning themselves ahead of a statutory shift that would finally open the network to institutional capital. Political urgency is driving this bill forward behind closed doors, as legislators face a pivotal 90-day deadline. The clock is ticking. The Senate Banking Committee is targeting a markup for the Clarity Act for mid-April. This legislation is a binary event. It will either clear the committee and move to a floor vote, or it will stall. That dynamic makes the current price a massive asymmetry play. You have to choose which data to trust, the retail panic reflected in the Fear Index, or the institutional logic behind that $600 million accumulation. With the committee markup scheduled for April 13th, the market is approaching a moment where the current regulatory status and current price levels will be settled.